Hey everybody, it's Pete. Good morning. Welcome to an episode of today's Best Stock Picks. It's Monday morning, March 15th, 2021. There's a lot going on right now. The market finished strong last week, 5 consecutive well-bid days, which was awesome to see. Today, we're going to see a little bit of sector rotation. This is really where your treasure hunting over the weekend and treasure hunting after the market closes really comes into play. You can't be static. You have to be paying attention to where the smart money, where the deep pockets is flowing, and seems like it's happening by the day right now. But if you really take a step back, you start to see month by month that it's getting pretty clear. Energy stocks had a really amazing bounce off the November lows, and they've been pretty easy to trade. The trends have been good. Then we started to go over into some entertainment stocks. And now we're actually seeing that energy is falling off the list, and we're sliding into what's known as consumer cyclicals. We have a lot to cover today. We got a lot of great opportunities today. However, something I want to talk about, I don't know why I laughed, something that I talk about a lot in the boot camp, which is very important. Over the years, as you become a more and more experienced trader, you start to learn which stocks you can't make money in, which stocks you make great money in, and which types of market environments you trade really well in, and which types you stay away from because they just beat the heck out of you. Two of the scenarios where in my personal trading plan that I don't trade are actually happening this week, which is a FOMC meeting. So I don't trade that afternoon, and options expiration. I don't trade those afternoon. I just feel like there's not an edge. I like to go into every day knowing exactly what I'm going to do. I expect follow through. I kind of don't expect anything out of the ordinary happening, and I can trade with conviction. Those two times they just happen to both be this week. Those are two situations where I scale back dramatically if I trade at all. If I have some good swing trades, I don't get out of them, I hang on to them. But I just want to spur your own thoughts when you're doing your own game planning, when you're doing your own trading. Stop trying to beat your head against the wall and try and trade everything. If you want to be successful at this, which I know you do. By the way, we got something new I'm introducing today in just a second. Figure out where your specialty is. Figure out where you just have a lot of confidence in those types of trades. It could be a particular sector. It could be a particular industry group. It could be a particular type of trading, maybe day trading versus swing trading, maybe buying long versus shorting. You need to really start to drill down into that and determine where you excel, and then only do that. Screw working on stuff that you're not good at. Only do what you're good at and really master that. Go deep instead of going a mile wide. You'll be very happy that you did. We're going to try something new today, which is on Mondays, maybe even a little more often, but we're going to start today. If you click on, you'll see somewhere on the YouTube channel, it's called Community. Click over to that. We put a poster of Tesla today, and it's well below its 50-period moving average. I want to hear your opinion. Chime in, leave a comment, leave a reason why, especially if you're actually long Tesla already. Will it close above or below its 50-period moving average by the close of this Friday, the week of March 15th? Let me know. I'd be curious. We have a massive amount of people in the community who love to trade Tesla. So the rotation that I'm talking about this week, we're still seeing the vaccine-related rally off the lows. Energy stocks are strong. We're going into consumer cyclicals. Energy still has some opportunities today, and I'm going to point out a few of them. However, they're more of a pause and not actually moving in the direction that we want right now. Last week, they kind of took a break, took a foot off the gas. No, that wasn't that was unintentional. And now we're starting to see some other stuff. But we're going to actually lead off with two stocks that we've been pretty active in over the last couple of months in the boot camp, which is Penn National Gaming and Caesars. There's a couple other stocks as well, but they've both been included in the S&P 500. It was announced last week. So we're going to take a look at those stocks as well. So we're going to head right over to the charts. Do me a favor, if you find these videos helpful, definitely click down and subscribe. Give us a thumbs up. I really appreciate it. If you have any comments about anything in the video, definitely leave that comment below too. Hopefully you had a nice weekend. I got a little bit of rest finally because I'm all jacked up again. So let's head on over. Let's take a look at the charts, and we're going to start out with there's the chart of Tesla I was talking about. Leave a comment. Go over to the community tab and give a comment. Let me know why you think it's going to be above there. We haven't talked about electric vehicle stocks in a couple of weeks. NIO, XPEV, both did not have good earnings. Tesla, you can see, got crushed, trying to claw its way back. Let me know what you think this week. S&P futures are actually trading slightly positive right now. So here's what we're looking at Penn. Penn is actually up 6.5%, trading at 139 and change after already having a good week last week. Caesar Entertainment as well. Now, we both know that when Tesla got included in the S&P 500, it was a giant catalyst for them to have another rocket move higher. So it's going to be interesting to see. We have been trading these stocks. We've also been trading DraftKings. So this stuff is in our wheelhouse. Remember what I just said before about trading stuff that is in your wheelhouse. So I want to stick with Penn for a second, and I want to make the distinction between Penn and Caesars. You'll notice on the charts, and this is something that we talk about a lot. You want to make sure that you're trading stocks that has daily market attention, where the smart money, the deep pockets are in there on a regular basis. Those types of active stocks are where the better activity is if you're an active trader, whether it's a day trader or a swing trading. You need to pay attention to whether or not you have what we call melted candles, which is consistently smaller candles. And you can see that this stock, for the most part, when it's in play, really gives you those big green or even big red if you're a short seller, but mostly big red, green candlesticks to take advantage. So now we're at the breakout. 128 was the breakout. So what is the trade today? That's the thing. If you're looking to be long off of this news, you're going to end up having a pretty big gap, a $9 gap. So you're obviously not going to trade back to 128, which would have been the stop loss on this breakout based on Thursday and Friday's price action. So you have two choices now. Do you chase this stock higher, which obviously I don't like chasing the stock. You want to get it as close to the optimal entry as possible. Or do you drop down to a lower time frame looking to initiate the entry? You have a smaller risk profile because the profit is pretty much in the trade already. Personally, for me, I love the idea. I'm going to let the news come out, play itself out a little bit. I'm going to actively day trade it today, let it pull back somewhere between 128 and 132, and then I'm going to look for an entry, a little bit longer term play in that direction. So day trading it actively today as long as it meets my criteria. But I want to make the point about the difference between this stock and Caesar. Caesars actually is a better swing trading stock than a day trading stock. You can see that the candles, for the most part, are not the same. The width of the daily candles are a little bit smaller, and it takes a little bit longer time to move. So I want to make that distinction. Penn, a little bit better for active day trading and swing trading. Caesars a little bit better of a stock to hold a little bit longer time frame. So working our way across the board, we talked about energy stocks and energy stocks pausing. So we want to point out FANG, and you can see here basically now a 3 or 4 day pause. We're going to talk about Hess and ExxonMobil. So they went from the top of the list in our sector rotation down to near the bottom because they basically paused for the week. It doesn't mean that they rotated and now they're not strong anymore. It just means that the smart money took their attention off it. And you can actually see what I'm talking about here with Exxon, where the size of the candles got dramatically smaller. They're not the larger green ones. So that's what we're looking for. We're looking for activity. We're looking for stocks in play. We're looking for the smart money where they're saying, yeah, there it is. You can see it on the screen where there's more attention. So that's what we're looking for. So we're looking for an expansion in volatility after the energy stocks were slow, but the other stocks I'm about to mention are in play and breaking out. So we're going to start talking about Quantscape. I'm actually going to rally these off pretty quickly, and you're going to be able to pay attention to where they are relative to the 50-period moving average, where the next levels they need to get through. So Quant needs to get through 65.50. It's still got a few dollars away. You can actively day trade it until it gets up to that level. We just talked about Penn. We just talked about DraftKings. We're going to talk about Nordstrom. Again, we got some really, really good clean charts here. Hog actually starting, you see this 50 is not coincidence. We have it on the screen, the 50-period moving average. It's flat here in Hog, but I love this breakout. It looks like it's got to get up near that 40 area. It'll probably get 40 and then it punch through that level. LB as well, and you start to see this really playing itself out. General Motors actually a really clean breakout last week. We actually had 56 on a swing trade that we took about a week and a half ago, got out. Now this is looking for a new opportunity. Kohl's is one that we actually called out last week. Hopefully got an early entry in that. It's opening up slightly higher. Carnival Cruise Line. So you're starting to see a theme here where we're looking at stocks where there's already attention, and then we're looking for follow-through. There's no need to pick a bottom, which is such a mistake. If you're a regular viewer of the channel, you also know that we called out BBBY, which we did in our game plan last Monday, had what we call an accumulation candlestick. It's got to get above this most recent range, which is flirting with that 30. I'm looking for well bid, higher high, higher low, higher volume, closing above 30, and then I'll start to feel a little more comfortable. That's not enough. It actually consolidated. I want to see consecutive candles. Wayfair as well. We had a nice bullish U-turn in Wayfair, and it's hovering right after. See, this is the thing that a lot of traders miss, and you really need to start doing this if you're not, which is you don't necessarily need to do all that research and say, oh, the stock didn't play that day, and then leave it alone. This one day here where Wayfair actually broke out of a monthly pattern that we look for in the boot camp, one of our members, John O'Connor, called it out, and the stock actually exploded $25 further after that day, actually even more than that, $35. So now the stock has been in the watch list, and we're seeing the level where it broke out from. This is a significant level. So we have a bullish U-turn staying, hovering right at that level. It's in the watch list, so now you need to pay attention to it. And above this level that's on the screen right now is where we're going to be watching it. So that's important as well. And we're going to finish up actually with Norwegian Cruise Line. You can see actually here pulling back and starting to rally again. So some of the stocks that I mentioned that I really like, Hog, I'm looking to get up there, LB, General Motors, Carnival Cruise, Kohl's, and Ross Star as well. So there's a lot going on today. Like I said, think about what I said at the beginning of the video. Know where you're good. Know where you're making money. There's no reason to try and trade everything. Become really good at something. Have the quote in your mind, go a mile deep instead of a mile wide. You'll get better experience, and you'll be in what we call your wheelhouse, which will help you trade with conviction. So again, energy stocks kind of paused last week. They're setting up for a breakout of that consolidation. Those should lead to good trends. If they break out to the upside, they break down, leave them alone. They might be out of play right now, but these consumer cyclical stocks have bounced. So that's going to be exciting this week. FOMC announcement this week. Options expiration at the end of the week. So you got Wednesday and Friday on those two happenstances this week. And pay attention to Penn Caesars this week for the inclusion into the S&P 500. Thank you so much for joining me today. Click over to the community tab here on the YouTube video, and you'll see the chart of Tesla. Chime in. Let me see where you think it's going to be this week. I know we have a huge amount of Tesla fans in the community. Let me know what you think it's going to be, and definitely click down, subscribe. I'd really appreciate it, and give us a thumbs up if you like the video. That lets me know that I'm helping you too, and it's the right kind of content. So have a great day, everybody. Hashtag trade like a pro and be awesome today. Thank you again so much for joining me. I really appreciate it.